Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Hang Seng absolutely at the flat line, as is the Taiwanese index as well.
We found support at the 20-day moving average. Immediate resistance is 25,116. 24,966 is where the Nifty is at, 0.14% lower. The Nifty Bank is down about 0.19.
This is a year where we're going to see these ups and downs. It's going to be more a sideways. It could be range bound.
We do see almost close to a lakh crore worth of shortfall on the direct taxes. Now, to counter that, this 60,000 crore approximately, which is the higher than budgeted number on the dividend, is a good cushion.
I think it's a whole combination of tariff, non-tariff, taxes to make US more competitive.
The Nifty, sensex down close to about 0.9%. The Nifty is at that 24,773. The sensex is at 81,400.
Since September of 2022, the Galwan family has sold stake in Indigo and has raised 40,000 crores. That is $4.7 billion.
Very, very volatile trading session with caps holding out above the flat line just for the time being. We don't know whether by the end of the session that will hold out or not.
Okay, that is a day so far, and what a day it is turning out to be. And, you know, you'd be hard-pressed to find explanations for each 250-point move, because we were down 250, then the market came up 250, then it lost 300, and now I think we're at almost at the day's lowest point. This is closing bell. We'll try and make sense of what's happening, and we'll, of course, look at individual stocks as well, which I think is easier to do rather than the indices. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi, Reema, and Nigel from the newsroom floor. Guys, afternoon.
Hi, afternoon. You would think that today's expiry, right? Today's the Thursday, the monthly expiry, given the kind of volatility that we've seen. But it's at least good to see, mid-caps, small-caps relatively outperforming. The small-cap index is in the green, by the way.
Yeah, that's true. But I am completely with Prashant. It's baffling to say the least. I mean, we are the rank underperformers today. Most global markets are up. US futures are up between 1% to as much as 1.5%, 2%, depending on which index you're looking at. And for us, it's been a down day for the better part of it. There was a recovery, but even that recovery has gotten sold into. And the large cap selling is all encompassing. It's not one or two stocks. It's everywhere. So let's see. FII flows, we go back to watching that, I guess.
The cat and the mice analogy that we were talking about.
Cat, mice, everyone's at work today. So the cat is also back. But yeah, quite something, Nigel.
Yeah, there could be an element of expiry, though, playing out, the weekly expiry that we have on the Sensex. So that could be a factor in play. And we know that on Tuesdays, the Sensex is actually the dominating factor. So maybe that there's an element of expiry as well. Going by the swift moves, down 250 points, then we moved into the green. I don't think we're yet finished. Last 50 minutes promises to be an absolute cracker, just going by the data points on the screen. So let's see how that goes.
Okay, well, just a quick look at, what is doing. Actually, advantage decline is slightly negative. Reema said the small cap index is in the green. Yeah, I mean, it's absolutely, it's 6 points down. I mean, was in the green. So it's kind of flattish, which is interesting. And let's just look at the mid-cap index as well, which is also absolutely flat. But you got about 1,500 stocks which are lower and about 1,240, 1,250 stocks which are higher at this point. Lots of names moving around. I think we'll get to some of these in just a bit. But Sachidaran Otekar is with us from Trade Bulls with what he'd want you to do in terms of trading indices and then stocks. Sachidaran, good to have you with us here. What do you recommend?
Good afternoon, Prashant. I think it's a day of consolidation. We've already seen, two big swings during the day itself. But looking at the data, it is certain that the Nifty may drift lower towards that 24,600 kind of a support, where its 20-day exponential moving average is also placed. So probably it may again find some demand near to that support base, and that's why I think it's a good idea to be on the buy and declines strategy. So going forward, we may see some further slippages, but I think an ideal level could be somewhere close to around 24,630, 600, wherein some long positions can be deployed. On the higher side, a directional up move may only trigger once the Nifty starts, trending above that 24,940 mark. So I think this is a broad range that we are looking from a consolidation point of view, wherein the Nifty is not looking, that weak. So probably this consolidation could be healthy going forward, and that's why I think buying near that support could be an ideal trading strategy. When we look at stocks, there are two stocks which are on our radar. Both are on the buying side. The first one is Chambal Fertilizer. Now, if you look at the overall data set, this particular expiry has been very significant for this particular counter. It has been trending lower, forming a lower top, low bottom sequence. But last three trading sessions, it has managed to, sustain near that support zone of around 600. What we observed is that for consecutive sessions, we have seen a bullish hammer formation, which is an indication of immediate support. So we are expecting a rebound back towards 625, and that's why we are recommending building long positions in Chambal Fertilizer. The stop loss for the trade can be placed at around 580 on a closing basis. The other stock on our radar has been Cholamandalam Finance. Now, again, if you look at the overall structure, the stock has been sustaining and trending well above its 5-day exponential moving average. It has again, given a fresh breakout from a consolidation range recently. So we are expecting that this particular outperformance may continue towards 1720, and that's why we are recommending building long positions here, keeping a stop loss at 1620.
Got that. Thank you very much for that. Last week, on Friday, the low on the Nifty was 24,614, but the more recent low was 24,462. So broadly, at least on the way down, this 24,500 is held on as a support, and we're still gyrating and oscillating within this trading range. But let's talk about individual stocks, the big movers today, and Sagility on the way down because the promoters have launched a very large offer for sale. They're looking to sell 15% equity. This is to meet the minimum public shareholding norms. Vinny joins in with more details. Vinny.
Hi, afternoon. So yes, promoter of Sagility, that's Sagility BV, is looking to sell around 7.39% via an OFS. It's a 2-day. One is today and the other part is going to be tomorrow. Via OFS, they'll be looking to sell the stake. There's an option to oversubscribe 7.62%. So overall, that comes up to around 15%, 15.02% in terms of equity. Now, the floor price for this was set as around 38 rupees per share, which was at a discount of around 13% to yesterday's closing price. So because of that, also, obviously, we're seeing a decline coming in. Now, Sagility BV, as on March 2025, was holding 82.39% stake. So they have to bring down that minimum public shareholding norm as well. So 75% around that mark is what they're looking to bring it down to. Sagility obviously is a technology-based healthcare service provider. They mainly are in the US markets. They focus on the payer space as well as the health insurance space. And when you're looking at it in terms of numbers that recently came in from Sagility, not that great, but the outlook what they gave for FY26 was something that that investors should keep an eye out on as well in terms of confident in maintaining their margins. They've given a margin guidance of around 24 to 25% for FY26. They expect low to mid-teens growth in constant currency terms as well. And debt repayment is also expected to be done and completed by FY27. So that will be interesting. And one fact that you should keep an eye out on in terms is the valuation. The company listed in November 2024. And now, in terms of the valuation gap that you're seeing, peak valuation was 60 times. Currently, it is trading somewhere around at 23 times in terms of PE. So that is important to watch out for. That we've already seen that fall coming in from peak PE as well. Outlook seems interesting. This OFS is mainly only to meet that public shareholding norm this time that we're seeing.
Thank you very much for that. 32 rupees was, I think, the issue price on Sagility. But let's talk about InterGlobe Aviation. Rakesh Gangwal, as a part of his planned equity sale in Indigo, sold another chunk of his stake today, with nearly 6% equity changing hands in a deal valued at 12,000 crore rupees. Nimesh is here with a timeline of Gangwal's family stake sale and the strategy they've adopted. Nimesh.
I remember before I talk about the timelines, who say that it's difficult to make money in an aviation stock, or for that matter, who says that when the promoter is selling is perceived to be negative for the stock price. And I'll tell you why I'm saying this. Ganwal actually family has defied that logic of promoter selling and aviation not making money for you. Ever since they had a split with the other co-promoters, since September 2022, they've been selling stake periodically and systematically in Indigo. And since then, they've raised 40,000 crores by selling stake. That is equivalent to $4.7 billion that they've raised since September of 2022. It's not done yet. Even after today's block deal, they still own close to 7.8% stake in the company, which at the current price is valued at almost 16,000 crores, and they have 150 days of lockup, so they can't sell for another 5 months at least. But still, even at current market price, that's valued 16,000 crores. So 40 plus 16 would mean 56,000 crores is what they can raise, or they can potentially raise from Indigo. So that's the math. Now, if you look at the history of the stake sale that they've done, it's kind of a systematic withdrawal plan that the Ganwals have opted for in Indigo. The first block happened in September of 2022. They sold close to 4%, 3.5-4% stake, and at that point in time, they raised close to 2,400 crores. The average stake sale price was 1927. So that was the first block that they did in 2022. After that, there was a 150-day lockup. So the next block happened in 2023, close to August or something. That's when they sold the next chunk. I think it will come on the screen. In 2023, they sold the further stake. Feb of 17, 2023. They sold another 4% stake exactly after 150-day lockup. That was the price at 1882. So marginal discount to the first block price. This was the only deal when there was a marginal discount to the previous block. And there they raised close to 3,000 crores. So that was the another block. Immediately after that, in August 2023, they sold another close to 4% stake. And that happened at 24.54 per share. So virtually a 38, 35, 36% premium to the previous block price. There they raised close to 4,200 odd crore rupees in that particular block. Then the next block happened in 2024. March 11, 2024, another 5.8% stake sold. They raised close to 7,300 crores. And that again price happened at 2342. Another 40% premium to the previous block price. So again, they did a smart thing of timing it nicely. Again, after a 150-day lockup in August 29, they sold further 5.8% stake, and they raised close to 10,707 crores. So that was another block. And finally, now today, they sold another 5.7% stake, which is May 27. 5.7% stake sold. 12,000 crores is what they've raised, and this deal happened at 50 to 50. So from 1150, the first block, to 50 to 50, that's the kind of rally the promoters have enjoyed, and timed it very nicely. So a good deal from a Ganwal's point of view. They still own, as I said, 7.8% equity, which is worth 16,000 crores. So already 40,000 crores in the pocket, and they can raise another 16,000 crores in the future by selling stake. But right now, there is a 150-day lockup for the Ganwals to finally sell out.
Wow, what a story, Nimesh. Thanks so much. Beautifully put. And absolutely, who says you can't make money in aviation? Whoever said that probably didn't know about InterGlobe.
So again, the other point is, Surbhi, it doesn't happen overnight, right? They've built this airline for 20 years. And finally, you can actually... So what is interesting is, I was just looking at the data. Today's block deal of 11,000 crores is virtually equivalent to the current market cap of SpiceJet. So with just 5.5% stake, you can buy out a rival airline if he wishes to.
That also gives hope to people who are holding SpiceJet.
Absolutely.
That's the other thing. Usually, Nimesh, we talk about buyer's remorse. And then, but here they should be seller's remorse.
But I guess, what I liked about it is that the fact that it's been systematically done every 150 days, you come and sell. And again, it was not always at a higher level. There was one instance where they sold at a lower price as well. And they had the discipline, right?
I just looked at so that date that you put, Feb 2023, when they sold. So the Indigo stock from then to now, 1850 was the price back then. It's now 5,300. It's up 85%.
85%.
The index, so it's not as if it's not the market. Index is up 40% in that same time period. So of course, there's been massive outperformance in the stock, which I think adds to the point that throughout this selling, the stock has continued to.
So again, the learning for me is, if the promoter is selling for a specific purpose, if it's a forced selling, one should not take it very negatively. Generally it pays off if you buy into when the promoter is selling. If it's a forced selling, like for instance, there is an OFS for coming to 75%. It's a kind of a forced selling by a promoter. That is when I think investors do get a chance to participate big time into a stock.
And investors have. I was just checking their shareholding. In September of 2022, which is when the stake sale started, the FI holding was 18%. It now stands at 25%. And the DII holding has gone up from 7.7 to about 20.5%.
So that is all, whatever the Ganwal sold is largely been
lapped up by the FIs and the DIs. Thank you very much for putting the spotlight on InterGlobe Aviation and the block deals that we've seen. Prakash, were you buying InterGlobe Aviation over the last 3 years?
Well, I've been quite positive on this, Rima. It's been such a wealth creator in spite of all the odds that are stacked against the sector. But then, Indigo has enjoyed a unique position, which has only got stronger by the day. Shortage of aircraft for other players, much more diluted operations for any veritable competition that could have come from Akasa and Spice. So I think it's kind of flown high just because of the situation. Now, whether you buy it at 50 to 100 and still expect to make money, the question is how long are you willing to wait? And there will be some air pockets it will go through, and that's the time to buy. But definitely, it's a story that I don't see any abatement in terms of the growth. So definitely a positive thing. The promoter stake sale does leave the company with just one promoter, but that hopefully is in a good situation of sorts, because at least decision making won't get impeded given the conflict that was earlier there between the Gangwal and the other Bhatia family. So that kind of eases out a lot of issues, but you should buy it at lower levels if you really want to continue making some decent money.
Okay, that's the story of InterGlobe Aviation. By the way, I'm looking at some more stocks which have been in news flow today because of either news or earnings. PG Electroplast is the other one, where promoters have been selling stake. That stock is down about 0.7% right now, not too much. InterGlobe, we have discussed. Sagility obviously is down 5% because of that, chunk of equity that's in the market because of regulatory reasons that OFS is happening. And then, of course, rate gain is a big casualty of the day. Prakash, hi. Let me talk about the stocks that are down because of either earnings or news. And let me ask you whether there is any reason to buy the dip. So whether it's rate gain or Sagility, let me throw in a Brainbees as well, First Cry. Stocks down about 6% on earnings. Any of these mid-caps fit your bill?
Good afternoon, Subhi. So two of them do. I don't track First Cry as much. But if you look at rate gain, while the numbers might seem disappointing, there's a very different growth trajectory that this company is following. Their growth impulse is more inorganic. They've raised money at a very, very decent valuation, the QIP. And they're still sitting on that cash. It hasn't been deployed. They've done one acquisition which has been absolutely stunning in terms of what it can contribute for the price they paid. Till they get another equally compelling opportunity to acquire, I don't think they'll deploy money, is what they've indicated in the calls. So I think it's a very, very sound, judicious management at work. There are lots of things that are working in their favor. This is something which they're going through the adolescence of the business, where they will emerge much more stronger given competitive intensity, margin pressure, whatever you call. But I don't think you need to be disappointed from a longer term perspective. Yeah, I mean, these numbers, probably there was expectation which was built in because the stock had run up, but that's not happened. But it's an opportunity to buy. The same thing goes for Sagility. As Dinesh said, the compulsion is to pare down exposure, and you're getting the stock at probably multiples which are far lower than what a company like this would deserve. And remember, though 38 was the floor, you still have the stock trading above that, which means there are enough takers for the business. So very, very good opportunity. I've been very positive on this. It's rallied, of course, and now it's come off from the peak of 60 times P multiples and all that. But this is a business that's fairly resilient as compared to BFSI and a lot of the AI impacted verticals. Healthcare generally, by and large, is bound to continue earning revenues for most companies.
All right, Prakash, I wanted your view on Eternal, and the stock is in focus this week because global indices, they'll rebalance the indices, which will result in some passive outflows. But the question is, will the domestic funds lap up most of it? Let me explain this. Now, foreign portfolio investment limit, that was reduced from 75% to around 49.5%. Because of this change, it's triggered a potential sell-off by global indices or a rebalance by them. So global index providers like FTSE as well as MSCI, they have reduced Eternal's weightage in their indices. This is what is likely to lead to potential passive outflows. Now, because of this, there'll be a total of roughly around $820 million worth of outflows for this week itself, of which around $300 million of passive selling is expected today. This is as per Nuvama alternate and quantitative research estimates. The question, though, is will the domestic money support the stock, since the DI holding in the company itself is close to around 24%, of which you have the active mutual funds that hold roughly around 14% stake, while the passive mutual funds hold around 5% stake in the company. Remember, the active mutual fund industry itself is sitting on solid liquidity. So it'll be interesting to see whether or not there is some deployment into the stock, given the liquidity, given the kind of holding that they have. The company, remember, did a QIP in November 2024, and at that point of time, the stock price was around 250 rupees. So currently, it is close to around 10% lower than that QIP price. Interesting times ahead. Supply is due. The question is, will the domestic money lap it up? Prakash, I wanted your view. I was going through this note that came in from Nuvama Alternate Research, and they were saying that maybe around 215, 220, they believe there's a good amount of support. What's your view on the stock? This passive selling could be absorbed. Yesterday, you saw the stock was down close to around 4.5%, but today it's more or less stable. Your take?
So, Nigel, I really don't have any empirical data to support what kind of the mood DIs are in terms of lapping up this huge bulge of liquidity. But from a fundamental perspective, probably you are staring at a bottom or some sort of a floor in terms of where things could go. We've seen hyper competition build up and then kind of abate a lot, and then now Zomato's probably got some of the things working in its favor. Especially, forget the food delivery part, the Blinkit part is likely to kind of continue getting more and more efficient as they grow scale. There are lots of geographies that remain untapped in India. Between Instamart and Blinkit, there's still enough and more to kind of leverage on, and they can keep on trying the new ones out. So there will be growth for sure. See, the DI mood is something which is difficult to anticipate. If everybody decides, then the stock gets support, right? But if just few of them decide, they might not see any price and volume impact on that. Like, to give you an example, look at Jio Finance. Jio Financial Services in the last 1 month has done almost 25%. Everybody had the right mood to buy it, arbitrage funds, active funds, everybody's locked into that. And just in over a period of a month's time, it's done so well. So my whole thing is that it will depend on finally how they end up acting rather than anticipating how they act. But fundamentally, I think that there's quite a bit of support at these levels. You may not go wrong buying at 220, 225 levels.
Okay, that's got that point. Market's still down about 200 point at this juncture, still about a 1% cut coming through. Prakash, finally, Jio Financial, the winner on the Nifty today. I think the excitement is growing as they will be launching more services soon, mutual funds, etc. Your thoughts?
No, very, very positive. In fact, you might be a tad late to buy it. Beginning of this series, I remember it was in that 230 zones. So, it's done exceedingly well. It's more from bottom fishing perspective. I think what the market sensed was that you've seen thanks to the March meltdown. This was a stock that got impacted, but there was no reason for it to be negatively impacted. You had tariffs as a key trigger. You had geopolitical risk as key triggers, but this has got completely resilient from that. And some of the services that they launch of scale, given technology, the way technology is kind of evolving so rapidly, means they'll be able to do it very, very efficiently in a cost-efficient way. So from that perspective, there's lots to come. Maybe it could kind of start announcing some of these things that have been in the pipeline in the works for some time. And that's when the revenue buildup will be more visible for all of us to kind of pencil in. But from an opportunity perspective, book value perspective, I think it definitely makes sense to have it in your portfolio. But as I said, it's moved up a bit. If you see some profit taking, see it at 250 levels, then you have a very good deal for yourself.
Okay, all right, got that. Thank you very much for that comprehensive point of view on all the stocks that we've discussed today. You have a good rest of the afternoon. We will move on now to a CNBC TV18 exclusive. Prashant caught up with GQG's Rajiv Jain, and Rajiv remains quite confident on India. In fact, he's still overweight on the equity market here, and also discusses GQG's latest India bets.
You bought into Bharti in a big way. I think that's a newer bet, Rajiv. And I think one name which we discussed in a very different context the last time we spoke, HDFC Bank. I remember you telling me that you've been, you held that stock for years. I mean, long back. And then, of course, you didn't own it for a long period of time. You didn't have it last year. This is, in that sense, a new addition. You want to talk to us about that, Rajiv?
Yes, so HDFC Bank, we thought was going through a sort of integration transition period as such between the two, HDFC and HDFC Bank. So since last September or thereabouts, last quarter last year till first quarter, we put almost $2 billion in HDFC Bank. And Bharti we started buying early last year, and then we've doubled down again this year. We've added a little bit to some of the other names too. Nothing meaningful, but they're like a few $100 million here and there. Nothing meaningful.
Okay, well, that is Rajiv Jain of GQG. You can watch excerpts of this conversation with Rajiv Jain all day today, only on CNBC TV18. Well, before we slip into a quick commercial break here, we're also excited to unveil our brand new global business news channel, the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders, and economists shaping both the world and India's future. CNBC TV18 Prime decodes global business shifts and their impact on India, giving you unparalleled insights. Tune in to CNBC TV18 Prime at 12 noon for the Global Reset and at 8:30 in the evening for the Global Lens. Okay, welcome back. 200 points lower on the Nifty. 24,800 is where we are at this point in time. It's very, very stock specific. And there's enough moving on both sides of the equation. Deepak Shenoy is with us, founder at Capital Mind. He's joining us now to take some questions. Deepak, great to have you with us here. Thank you for joining us. You know, we'll put out the LIC expectations with Yash in just a bit, but it's a name that I think we've spoken about in the past and a name that you still own, Deepak.
We still do in the PMS, yes. Thanks.
What's the... By the way, life insurance companies have gotten a real boost over the last couple of months. Stocks are significantly higher. LIC, I'm not very sure, though. The private guys have all done quite well. What's the prognosis here, Deepak?
So I think in the longer term, the idea on LIC has largely been that it's relatively undervalued compared to the private insurance pack. One of the good things about it is it's changed its accounting standards in the to become more oriented towards how private insurers value themselves or value their earnings. And more of the earnings have started to accrue to shareholders. Now, in the last quarter, this is the Q4 of FY25, the results are still due. But I think one of the things that they have done very interestingly is that, they have this mix of participating and non-participating policies. Non-participating is where a large amount of the private insurers play, whether it is term plans or money-back policies and so on. These are non-participating policies. You get a fixed kind of a return or a certain type of insurance, and you get your money. If you, in a term plan, if you, for instance, don't die and the policy matures, you don't get anything back. So the money entirely, which has been kept for the risk, goes as profit to the insurance company if you don't die in that period. Versus participating policies are where the profits made on the investments made by the insurance company are effectively participated in by the policyholders. The participating policies, the profit that is taken out is usually roughly 10% of those profits accrue to the shareholders of the insurance company. Rest goes to the policyholders of the insurance company. And LIC was earlier not sharing anything at all to the shareholders because there were no shareholders. There was only the government. And now it has slowly inched that up from 0% to 10%. This year, the last quarter will contain the participating policies profit, which is usually why LIC's last quarter profits are usually much higher. So we believe this year it should come to a full year of above 45,000 crores. So a big profit is expected in the last quarter. And hopefully that will mean, something of the order of either corporate expansion or dividends. One of the two, I think both of them will come from LIC as an announcement. They've said that they will announce the dividend numbers as well. So I think that will, positively shape how benefits accrue to shareholders. And I think that benefit has been increasing over the last few years, and perhaps this year and the next year is when those benefits will reach true accounting standards in that sense, and therefore true shareholder value. That is why we like that space, though the insurance space has been struggling for a while because of a lot of rule changes and a lot of tax negatives that have come in. But I think those have also settled in to a large extent. I believe still India is underinsured, so there will be a lot more growth of the overall industry, and LIC has a lion's share of that market. But also the fact that they're moving more into non-participating policies, they're increasing their take rate from participating policies, and the general growth of the industry should augur well for the organization going forward. I've said this in the past, but we are interested, so very biased on that respect. The share hasn't done quite as optimistically as I am, perhaps, but it's a matter of time, I feel.
Deepak, we've spoken in the past about how consumer habits have started changing, and travel is right on top of that. And that puts the spotlight on hotels and, airline stocks. So Nimesh was just telling us how InterGlobe Aviation, despite so many successive promoter stake sales, the stock continues to rise and rise. The stock has doubled in the last 3 years. You've looked at InterGlobe Aviation at this price. I mean, first, is it a part of your portfolio, any disclosure? And at this price, is it attractive?
It's not in our portfolios at the moment. I don't know. Maybe it's part of a technical one which I'm not aware of. But I think more or less one of the problems with InterGlobe has been that it has been very linked to the crude prices. So earlier, when crude prices used to rise a lot, InterGlobe used to, Indigo used to lose a lot of money. So you'd end up with this massive quarter of some 2,000 crores of losses and so on. And then some others. Now, I think they have a little bit of changes in some of their, perhaps their ground handling pieces and some of the other things that are coming. And their promoter stake sale is the second big thing because the promoters have been consistently selling. But this is not new. Even during the IPO, the promoters took out a ton of the cash that was in the company as dividends, and then they issued more shares in the IPO. I think that was when it actually came out. So I don't think that's necessarily a bad thing. Overall, the company will be more broadly owned. And right now, there is no meaningful competition other than Air India. Which is or Indian, which is essentially your the core of your competition. Akasa is relatively small, and the other competitors have gone out of business. So until there is another competitor, I think this company will do well. But as we've seen in the airline industry in the past, there will always be some billionaire who will come and start an airline and cut into your margins. So you shouldn't overvalue these companies too much, uh, because it has resulted in the past in sadness, and I think it might surprise us negatively also. We don't own it, although we like the space. We just feel that somehow airlines as an industry will grow, but almost nobody seems to be able to make any meaningful long-term profits in this space.
Okay, so still not quite convinced about aviation. All right, take your caution on board as well. Deepak, hi, afternoon. GE Vernova, KC International, power, T&D space. We spoke to KC this morning. They were sounding quite optimistic about this year. GE Vernova, we know what the stock's been doing. Off and on, it goes into these big bursts, right? And even after this result. Then there's also Hitachi Energy, of course, those HVDC orders. Do you like anything in this space?
Yeah, we've liked Power India, Hitachi's. We used to, I think we participated from the time they demerged from ABB. The stock listed at 900 rupees in during COVID, actually, around 2000, and now it's at, I don't know, 17,000. So it is quite a remarkable run from that time, despite economic profits not meaningfully having yet been demonstrated in the firm's books. We did exit from it a little bit earlier this year, but we've gotten into more players in the T&D space. I think the idea of the T&D space will actually do really well. HVDC is useful because much of the renewable power produced can be moved in HVDC formats much better, and DC does not lend itself to easy transmission. That's why you convert everything to AC and then transmit it, right? So losses tend to be bigger. So the equipment required is more sophisticated when you want to high voltage DC. And what is really what a 12-volt DC can do is probably something that you'll need a much higher voltage on an AC network to do in the first place. So efficiency metrics are slightly different. I think this is a very good space to be in general in the transmission space. I'm not so interested right now in generation, but transmission and distribution tends to be, so equipment manufacturers, EPC players, some of the EPC players in this area, and people who benefit directly from the transmission part of the ecosystem, I think are where India's near-term future will lie. We should get more generation in the next few years, and perhaps 4 or 5 years later is when generation will start doing well.
Okay, so till then, play the transmission, guys. Got that point. Good conversation. Thanks so much for all the perspective. Deepak, you have a good rest of the day, and we look forward to the next conversation soon. Thank you very much. All right, we do have to take a very quick break on that note. Come back on the other side, and then we'll have Nimesh back with the D-Street chatter of the day, and then some final trading ideas with our technical expert as well.
Welcome back. Well, the headline index is still down 170 points or thereabouts, but we've recovered close to 100 points from the time we started off the show. And keep in mind, the mid-cap index is now up close to around 100 points. That said, it's around 3 p.m., so let's get Nimesh to give us a sense about what he's picking up in D3 chatter. Nimesh, what are the flows picture looking like?
Well, actually, while the Nifty is down 170 points, I won't read too much into it, largely because today we have the sensex expiry, so it adds to the volatility. And of course, this week we have the monthly expiry as well. So next 2 days could be quite volatile. And in that sense, the institutional data may not be too much to read into, so to speak. And today's number will also look larger because of the two large blocks, right? But having said that, outside of blocks as well, I understand there is buying interest, there are buy flows. So X of blocks as well, you might have slightly a positive number from the FIs. That's a broad feedback. I guess from a buying point of view, the PSU, selective buying in PSUs continue even in today's market. So again, Concor is up 3% today. There are a lot of individual stocks which are buzzing, and there's a bit of interest as well from large institutions. I guess barring the overall flows, the trend of block deals is likely to continue. So as and when the earnings season is coming to an end, you might see a good pickup in blocks and OFS in the days to come, simply because there's so much of liquidity in the system, and I guess that's what will get matched with this kind of supply which is coming in. So X of blocks for today, I can say there is buying interest from large institutions.
Okay, all right, that's good to hear. Then Nimesh, what about individual stocks? What are you picking up?
Well, so in terms of individual names, the first stock on my list is Inox Wind. After a long time, some sense of buying interest is back in that stock. I understand one leading family office has been active buyer in the last couple of days, so that's the reason why that's buzzing in trade today. The second stock is ITC. I spoke about ITC hotels yesterday, expecting a large block. Now there is a very strong indication of a very large block in ITC itself. And again, no speculations there. There is a big rumor going around that maybe BAT will further sell stake. The only issue is, internally I checked as well, and the feedback is, last time the parent did clarify, or BAT did clarify in the investor call that they won't fall below 25%, and they own just little over 25%. So need to see whether they're open to diluting beyond 25 as well. So that's ITC under pressure today. The third stock is Max Healthcare. A bit of buying interest is back in that name as well post earnings. Again, there are buy flows is what I understand from a flow perspective. And the last one is Indus Tower. The stock is not down. In fact, it's up 0.5%. But I understand there is a very large offer bid from a leading FI investor. So maybe there could be a block or something, but at least there is an offer in Indus Tower at current levels.
Thank you very much for that. Let's get to the market technicals then. The Nifty is down 160 points below that 24,850 mark. Sachitanan Utekar from Trade Bulls is now with us for a few BTST calls. What would you recommend?
Well, I think we have seen a strong recovery again. 24,700 support has acted well, and we have seen a probable closing towards 24,830. So we are expecting this momentum to continue towards 24,940 in tomorrow's session, and that's why both the recommendations are on the long side. The first one being Canara Bank. If you look at the last 5 trading sessions, the stock has been very steady. It has been maintaining its closing above its 5-day exponential moving average. It looks like a bullish flag in action, and we may see a breakout soon, which may push the stock towards 116 kind of a zone. So we are recommending building long positions here, keeping a stop loss at 106 on closing basis for a target of around 116. The other stock which has come on my radar is Laurus Lab. Throughout this particular expiry, the stock was trending lower, but if you look at the options data, the 600 support looks very strong. On the daily scale, we are seeing multiple averages converging near that 605 mark. So we are expecting a recovery in this particular stock, which may push the stock back to 640 kind of a range. So from a trading perspective, the target should be placed at 616. Stop loss should be placed at 590 on closing basis, and fresh longs can be deployed in Laurus Lab.
Okay, all right. Thanks very much for that. Well, Apollo Microsystems is in focus post their fourth quarter numbers. Stock, of course, is doing very well. Ria is here with more. Ria.
Well, yes, Apollo Microsystems has been trading higher in today's session on the back of some very strong commentary from the management in yesterday's earnings call. Now, remember, even last week, the company had reported a very healthy set of numbers for Q4 with the revenue going up by around 19% over the previous year. And we also saw an EBITDA margin expansion of around 100 basis points in this quarter. The order book is also very strong at rupees 615 crores. Now, coming to what the management has said yesterday, going forward, they're expecting a revenue CAGR of around 45 to 50% over the next 2 years. But this is X of the recent acquisition of Ideal Explosives. But if you factor in the contributions from the recently acquired company, the revenue growth is expected to double in FY26 itself. In terms of margins, operating margins are expected to improve in the first half of FY26, but going into the second half of the fiscal year and into FY27 as well, the margins are expected to moderate a little bit owing to the ongoing and the planned capital investments being undertaken by the company. In terms of the order book, that is expected to triple by FY26. So from the current rupees 615 crore levels, they expected to go up to approximately rupees 1800 crores. They've also got some huge orders on the anvil. They're expecting orders related to QRSAM from Bharat Dynamics within the next 2 quarters itself, and they're also expecting some orders for subsystems for Project Kusha. Now, apart from this, working capital cycle days are also expected to reduce by around 100 to 120 days from FY27 onwards from the current 423 levels. And apart from this, the company also plans to use the proposed preferential fundraise of rupees 816 crores for working capital and for R&D expenses going ahead. So on the back of this very strong commentary coming in from the management, the stock was up over 15% and 1 point in the session today.
Absolutely. Really, the other one is Cosmo First, right? I mean, there were numbers, but the stock has really gone berserk. Tell us what's happening here.
Well, yes, Cosmo First has definitely been in focus. The stock is up over 60% since reporting its results last week. Even just in less than 2 months, the stock is up over 100%. So let's take a look at what has been aiding this rally. Firstly, in terms of the Q4 numbers, the revenue has gone up by around 16% over the previous year. The net profit has also jumped up by over 80% over the previous year. But if you look at it on a sequential basis, the net profit has actually declined by around 10% compared to a sequential revenue growth of around 6.5%. Going forward, the company has said that the capex that they've undertaken over the last 3 years is going to lead to a very significant ramp up in both revenue and profitability over the next 2 to 3 years. For FY26, the revenue is expected between rupees 3,500 to rupees 4,000 crores. In fact, the new BOPP line of the company, which is expected to start operations in Q1 of FY26, will also lead to a capacity expansion by 40%, and this is the key business segment of the company. Now, another reason for the recent stock move can be attributed to the fact that there was a fire at the plant of the competitor Jindal Polyfilms, which is why the plant operations have been disrupted on a temporary basis and which could lead to some increased demand for Cosmo First. So overall, even though the outlook is quite positive and the results have been strong, largely strong for Cosmo First, there are some things that we need to be cautious of on this front. Firstly, the long-term borrowings of the company have increased to over rupees 1,000 crores compared to rupees 680 crores in FY24. The net cash flow has also decreased to about rupees 166 crores versus 245 crores in FY24. The 3-year revenue CAGR is also at negative 2%. And lastly, the stock is also under the ASM 1 category at the moment.
Thank you very much for that. Let's talk about LIC. LIC will be reporting numbers later today. Yash joins in with the expectations.
Well, Rima, from LIC, as far as Q4 is concerned, the print is expected to be weak this time around. We are expecting a contraction on all important fronts. So if you speak about the new business premium in the fourth quarter, CNBC-TV18 poll expects a contraction of about 11%. The number that we're looking at is 68,714 crore rupees. The total AP, we are expecting that to reduce by about 13% at about 16,826 crore rupees. Retail AP could see a bigger contraction at about 36% down at 11,020 crore rupees. Value of new business again 22% lower at 3,185 crore rupees. Importantly, margins are expected to contract this time around, but that is of course also because in the fourth quarter last year the company saw its best margins at 21.1%, but this time around they could reduce by about 220 basis points at 18.93%. These are the numbers. Of course, the expectation is weak, but also the stock is down about 30% nearly from its 52-week high. Any surprise on these numbers and specifically on the margins could lead to a re-rating as far as the stock is concerned.
Okay, all right. Got that, Yash. Thank you very much for the update over there. We'll keep that in mind. Let's move on. We have Jay Bala of Cash the Chaos joining in. Jay, great to have you on. Thanks so much for being with us. Today is a bit of a strange day for at least the bulls here because the market was cruising along till yesterday, and today global cues are good, and yet we've got the sell-off. But overall, what sense do you make? I remember it was your India visit when we were talking in the studio. You had turned positive on the Indian market after a long, long time. Still retaining that view?
Yeah, hi, Sarvi. That's the view for the medium term. The 29,000 objective that I have for the Nifty, that still remains intact from a 6 to 12 months perspective. In the near term, although the market is quite ambivalent, a number of possibilities are there. But if the Nifty can hold 24,462 and take out 25,116, we could see an upside acceleration come through for the market. But that is not obvious for me either. So I would prefer the market to drop somewhere closer to 24,000 and then take out the May high of 25,116. But the medium-term picture remains the same. It's bullish for the markets. The same goes for the global picture too. As long as S&P can hold above 55.95 and the Dow Jones can hold above 4,700, there's a more immediate possibility of market accelerating higher. But in the event the market value would drop below 55.95 on the S&P or the 4,700 on the Dow Jones, we could see a slightly deeper pullback and then resume higher. Anyway, the broader point for the Indian markets as well as for the global markets, it's buy on dips.
Okay, all right. Hi, Jay. Good to see you this afternoon yet again. Since the market could be in a bit of a band, but you're maintaining a bullish stance on it, what about individual stocks? Give us a couple of ideas.
And I like the one I convincingly like is Schneider Electric. It comes from the capital goods space. I've been pointing out that I'm positive on the capital goods space. Schneider Electric has a stop loss of about 540, and today's print of intraday high was a spike high of somewhere close to 708, I think. And that's sending a message that the decline from the July highs is a corrective decline. So the markets are likely to take out the all-time highs sometimes in, say, a few weeks to several weeks time frame. But 540 as a stop loss is essential. There's a hesitant bullish call on credit access Grameen because the volumes are quite low and the stock gets quite choppy. That's the reason why I'm hesitant. So your position sizing should be appropriate. So slightly lower than your usual allocation. As long as the stock can hold about 924, I remain bullish on the stock, and you can take this as a short-term call rather than a medium-term call.
Okay, all right. Got that. Jay, we'll just come back to you. Need to take a very quick break. As we take the break, let's quickly remind our viewers the good news that's come in. India's business news leader is now just a click away. Introducing CNBC TV18's all-new app. You can get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC TV18 app from the Apple Store or from Google Play. You can even scan the QR code on your screen.
Welcome back. Well, a few stocks actually are moving very, very well. Jio Financial Services, what a beautiful move actually. In the month of April as well as March, when Reliance Industries was making a bounce back, actually Jio Financial was paling in comparison in terms of its move. But now if you look at it, if you pull up a last 1 month chart of Jio Financial as well as Reliance Industries, in fact, for the last month or so, Jio Financial has actually outperformed the big boy Reliance Industries from where it gets majority of its value. So it seems there's a bit of a catch-up that's taking place on that particular counter. Jay Bala is still with us. Jay, I want to ask you about a couple of other important global triggers from an India market perspective. The dollar index, that's slipping on a day-to-day basis, and that dollar dominance seems to be fading away. Where do you see that one headed?
Yeah, the dollar for the short term has got a protection at the 96.5, 95.5 levels. And in fact, the recent low it registered at about 97 and change. That may not get taken out in the very short term. The dollar could bounce to somewhere close to 104 before coming back to test the medium to long-term support at 96.5, 95.5. So in the very near term, it's bullish, but the medium-term trend seems to be lower. But the medium-term trend is put to test around 96.5 and 95.5. I anticipate a sizable rally post the next low that goes below the 97 low. So, so it's a bit of volatility in the medium term, and the short term is very slightly bullish.
All right, 96.5. Got that. Jay, what about Brent crude prices? That as well is showing a lot of weakness. It can't get past that $67 per barrel mark as well. Where is that one headed? You have mentioned in the past it could be a little subdued. I think it has a near-term support before bursting away. Near-term, where is it headed?
Yeah, crude has got a short-term resistance. The fluctuations in NYMEX crude is more obvious than the Brent one. So I'm choosing the NYMEX as my benchmark for the moment. If it does cross 65.12, I think that will give rise to a complex correction. That's the more probable scenario I'm anticipating to happen. I expect both varieties of crude to rise from here on. But 65.12 is important to be taken out on the NYMEX crude. Once that's taken out, I anticipate a complex rise to somewhere close to $78. So short-term bullishness prevailing for both varieties of Brent. But the more important thing is, the main clue I took for the markets to turn bullish is from Bitcoin. Bitcoin has clocked fresh record highs. That's signaling that animal spirits are back in the market. And the short term could see some pullback for Bitcoin somewhere close to 95K to 93K, but further higher highs are due. And that, in essence, tells us the animal spirits are back, and that will also bring higher highs for equity markets.
Okay, got that point. By the way, just going back and looking at some of these power stocks, power equipment makers. Both Hitachi and GE Vernova, can't take your eyes off them because they're back to their winning ways, between 5 and 7% higher. I just heard a fundamental view coming in from Deepak Shenoy on this. In the morning, we had Sridhar Sivaraman, who was saying that he's quite positive on the power space as well. GE Vernova, by the way, in the last 1 month, we're talking just the month of May, has put on 41%, 42% gain. And it's taken out its all-time high as well. This is what we're talking about. Look at that, 50% up. On the stock, and that's why they say that this is a stock picker's market. Jay, I don't know if you've seen these stocks on the charts in India, power stocks, transmission, distribution, grid operators, etc. I mean, hectic price action. Any advice here?
Yeah, GE Vernova in particular has got more upsides to work with, and it's got a pullback due, but the momentum is quite strong on the upsides. I won't be surprised if the stock were to clock 3,000 in a few weeks' time. But first, there could be a pullback that fills the gap somewhere about 1960 to 1900, and then takes out to much higher levels. I'm not too confident about the Hitachi stock, but even that's the momentum isn't as strong as it is in GE Vernova. But so prefer GE Vernova over Hitachi. No, and if these I don't track the BSE capital goods index so closely, but these can be components of the capital goods space. So it's no surprise that they are moving vertically.
Anything in the large cap space? Any trades that you would recommend?
I'm monitoring the real estate space very closely, and interesting price patterns prevailing in the Nifty Realty Index. There is an inverse head and shoulders breakout, and DLF is looking quite attractive. And I would rather wait for a pullback to come through in DLF And even Oberoi and Godrej, they're also forming good basing patterns. Right for the moment, the markets are stuck because there is no new triggers coming from fresh sectors. So probably I will anticipate something to happen in the real estate sector. If that happens, that will have a knock-on effect on banking as well as cement stocks. So watch out for something to happen in the real estate space. That's what the charts are pointing out.
No, absolutely. And Jay, hold on. We're going to come back to you as we, let me just quickly wrap out things. 160 points down on the Nifty, 24,837. So over 1,000 points in terms of this volatility that you can see on your screen. Down, up, down, and a little bit up again. So big moves, at least on the Nifty. But even, you know, with the 160 point cut, it doesn't feel like a particularly bad day because of the amount of stuff which has happened as far as broader markets are concerned. So a really long list of volume-led gainers is what we had coming through once again. I mean, actually on the Nifty, there's not very much at all. You know, Jio Financial, and I think there was InterGlobe Bank. Those are the only two names which had any meaningful gains. Otherwise, everything else less than 1% up. And on the downside, again, I mean, you know, it was just that lots of stuff was down, but nothing meaningfully. Ultratech was the only 2% plus kind of a loss. Whereas if you look at the broader market, you know, it's pretty exciting stuff. Bayer Crop 10%, Apollo Micro 12%, Camlin Fine, GT&D, Hitachi, Aventil, Cosmo First another 6%, Premier Explosives, Minda Corp, Centum, Nibe, Sequent Scientific, Tega Industries, Jyoti Structures, Suvain Life Sciences, Exicom 10%. So vibrant, really. Shankara Bilcon another 5.5% odd. Advanced Enzymes about 6.5% odd. So lots and lots of activity really coming through as far as the broader market is concerned. Of course, there were losers as well, and some of them backed by volumes. But you know, as I said, nothing really very, very negative, or it was just a down day. That's it. So 24,840 is where the Nifty is now finally closed at. I think what we're going to do is we're going to wrap up things on this edition of Closing Bell. From all of us here, it's goodbye. Thank you very much for staying with us. But don't go anywhere. Markets forward will pick up on all the action in just a bit on the other side.